It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, April the 26th, 2016, squeezing out the last few drops of this fourth month of the year 2016. Got another jam-packed newsletter in store for you tonight. We got crude, S&P, gold, and of course the euro. Markets are preparing for a day filled with news tomorrow. We get the FOMC and the inventory report tomorrow for pretty much all the markets across the board. Crude oil is bullish with a triple measured move after this afternoon's API number sent prices spiking higher, getting closer to that $45 a barrel heading into Wednesday's inventory day. The S&P is sideways ahead of the news tomorrow. Big news for the E-mini tomorrow. And of course, both gold and euro, although they will also be highly affected by the FOMC, they've got some pretty decent short-term trends to work with before the storm breaks out tomorrow afternoon at 2 p.m. Eastern Time. Before we jump into charts, check the schedule for tomorrow and give you guys some strategies to look forward to on Wednesday. I want to remind you the only place to watch the full-length version of our trading newsletter is on our trading blog here at sidewaysmarkets.com. If you're watching this video right now on the YouTube channel, there's a link in the description of the YouTube video. Follow that link and come join me here at sidewaysmarkets.com where you can watch the full-length version of this newsletter. While you're here, don't forget to grab a free pass in the upper left-hand corner. Come out and join me in the trade room as a guest for a few days next week. In the lower left-hand corner, don't forget to join our mailing list. All I need is your name, your email address, and then check your inbox. I'm going to send you a verification email. That way I can get confirmation to send you an email every evening between 7 o'clock and 8 p.m. Eastern Time when the nightly newsletter is available to be watched. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. Grab all the charts, have them ready for your own trading tomorrow by following that link below the video. And then over here on the right-hand side, I will encourage you to learn more about what it means to be a student here at School of Trade. We have beginner, intermediate, and advanced levels of membership to learn everything you need to know about kickstarting a new career. Take your free trial membership on the right-hand side. And if you have any questions along the way, please don't forget, we're always here to help 24/7, 365. Hope you guys and gals had a great Tuesday so far. I apologize about last night's full-length version of the newsletter. First time I've had that happen in a very long time. Our video server was having some significant problems, but never gave up, got it done, and sent it out a little bit late, but I hope you guys will accept my apologies for coming in a little bit late tomorrow or yesterday evening. And again, you probably agree with me. We rarely have any technical difficulties on this newsletter. So I was, anyways, I was happy to see it was able to get finished up and sent out, albeit a little bit later than scheduled. And hopefully tonight we'll have no snafus in the system for tonight. All right, looking at the newsletter report for tomorrow. What's the schedule for tomorrow? Tomorrow's Wednesday, April the 27th. We get some light news coming out of Europe. We get the GDP report out of Great Britain, but most eyes and ears are going to be focused on two things tomorrow. The first one is going to be the inventory report for all the crude traders and the S&P traders. Don't forget, the S&P 500 has been the shadow of crude oil over the past 6-8 months, ever since the oil market took its old header right off the $27 a barrel mark. Right, the S&P 500 has been following in its footsteps. It's deviated a little bit tonight, but historically, though, over the past 6 months, though, we have seen the S&P follow crude. So don't forget, what used to be a news report only for crude traders, we have that, of course, now tracking for the S&P as well tomorrow morning. The second big report tomorrow is ultimately the big news of the day. The Federal Open Market Committee, or should I say 8 times per year, they begin this 2-day meeting. They started the meeting today, this morning, and tomorrow afternoon at 2 p.m. Eastern Time, we'll be hearing from Janet Yellen and the crew at the Fed talking about monetary policy. Now, talking about these news events for tomorrow. First of all, we do have 8:30 international goods, 10 o'clock. Those will be news events you do want to trade around 5 minutes before, 5 minutes after. Don't forget, we cover all the news reports in our beginner's course here at School of Trade. Of course, how we use the trading calendar and how we trade around these news events. And then, of course, we go into the big boys and girls tomorrow. We get the petroleum status report tomorrow morning, 10:30 a.m. As I always say every Tuesday night ahead of the inventory report tomorrow, and this will also go with the FOMC announcement tomorrow. These are big, big news events. Be careful tomorrow. What I'm going to talk about tonight are what we anticipate these scenarios to look like for tomorrow. I would be lying to you right now, though, if I said that I knew what that news was going to be and then how the market was going to react to that news. The news itself really has nothing to do with the reaction. Can we all agree on that? How many times have we seen the petroleum status report, the inventory report, be bullish just to see the market fall $5 lower? So the news is not really what we're watching tomorrow. Tomorrow we are going to sit on hands 15 minutes before both of these news events come out, and then we're going to wait at least 10 minutes, okay, let the dust settle until we can see what the reaction looks like. Now, I'll tell you the exact same thing I'm going to tell my clients tomorrow morning at 8 o'clock Eastern Time when we open up our trade room. Do not try to wrestle this wild animal tomorrow after the news comes out. The difficulty is that although you get more volatility and you get more volume, there's much more volatility than there is the increase in volume, and the liquidity dries up. What that means is your stop loss will not protect you if you're on the wrong side of the market. Okay? If you don't know what I'm talking about, make sure you call your broker, right? Or simply join as a student, and I'll teach you all about how buying and selling works. This is the futures market. It's not the Forex market. It's not CFDs. These are actually real buyers for every real seller. It's a real market, which means when the price starts whipping around left and right, you're not trading with your broker. Okay, like you are in Forex, you're actually trading with somebody else who has to take the opposite side of that trade. If you're long and the market is barreling lower because it's right after news, there aren't going to be any other buyers take the opposite side of your position, right, to let you out of that long position. All right, guys? So remember, be careful tomorrow. Be careful tomorrow. And like I always say, don't try to wrestle that wild animal tomorrow after inventories and tomorrow after that news comes out, because you cannot practice and prepare for the illiquidity that's going to come after that news. Okay, I would rather say don't even try to trade the news. But if you want to trade the reaction to the news, give it at least 10 minutes afterwards, and be careful. Be careful. There is a lot of risk that comes into these markets. Exponentially more risk after the news comes out. These two news events, one, of course, being the petroleum status report, and the other being the FOMC announcement. All right, guys? I hope I scared you a little bit on that, because, boy, I'll tell you, I wish somebody would have scared me a little bit more when I was a brand new trader. Took way too many losing trades trying to trade news, right? It looked so enticing, but again, it's liquidity that you simply cannot anticipate, and you can't practice it unless you're trading live. Let's keep going. Starting out tonight on the oil market, we'll go oil, S&P, gold, and we'll wrap up with, of course, the euro. Crude is bullish and trading at the highs of a channel with a triple measured move this evening. This tells us the buyers will be looking for a pullback to support levels for a second leg higher tomorrow before the inventory report is released. The bull channel tells us to buy the lows and take profit at the highs. The triple measured move will be used as support and resistance along with this evening's API report levels at 44.35 and 44.02 tomorrow. The trading range is a very key level of support below and would make an excellent location for buying opportunities tomorrow, because the buyers will likely want a second leg after such a strong bullish move into the closing bell. The first thing I want to talk about on this chart tonight is the fact that we have such a strong reaction to this API number. Now, if you're not a student with me, if you are a student, make sure you go into the beginner's course under economic news, and we talk about this stuff in a lot more detail. Every Tuesday evening at 4:30 p.m., we get the American Petroleum Institute's API number. That's what pushed this market higher tonight. Tomorrow at 10:30 a.m., every Wednesday morning, excluding holidays, we have the DOE, the Department of Energy report, tomorrow morning at 10:30 a.m. Those are the two biggest news reports that we get as crude traders. Tonight, Tuesday night, we saw the API number. Price spikes higher. Typically, when we get any spike of this magnitude, we're going to get a second symmetrical move higher. Now, the hard part is that what we don't know is how far it pulls back. So what I will be looking for tomorrow is how far do we pull back and then measure the symmetrical move from there. With such a strong push higher, we always expect to see a follow-up leg. There are going to be a lot of buyers that will be enticed into this move higher, but they're not going to want to buy at the high, right? No smart buyer wants to buy high. They want to buy low. So that's the first thing that we see here right now, is that big, strong move. The second thing we see is this trading range. This trading range you can see here, breakout would be a beautiful area here for a breakout pullback or for a trap low. Try to see those sellers take it lower, fail, and go higher, right? That's the two spots where the buyers are going to be looking for opportunities here tomorrow, at the high and the low of that range. The next piece of the puzzle is going to be this bull channel. Like all channels, we expect rotation. We expect price to go from the low to the high, high to the low, and so now here we are coming off the low of that channel up to the high. We're expecting a pullback back to that low. Okay, so those are the three main components. Of course, tomorrow, again, we have inventories tomorrow. At what time? At 10:30 a.m. Eastern time. Now, here's what the bulls want to see here going forward. First of all, they want to see a pullback to support, right? They want to see a pullback to support. With a strong move higher like this, every buyer is just waiting for that next leg higher here. Hopefully it doesn't come too early tomorrow so I can be part of it as well. But hey, that's the benefit. That's the gift and the curse of living on the west coast of the U.S. The next thing is the buyers want to see seller failure at support. Now, we've got a lot of different support levels: 44.35, 44.18, 44.02, 43.92, 43.71. In fact, if you draw this trend line up here, here's another area of support right there as well. So we don't know which level of support will be the one that holds, but we do know that we're looking for seller failure, right? What that means is, and this of course goes right along with the sequence we always talk about, failure leads to strength, strength leads to continuations, continuations lead to ranges, and ranges lead to traps. Okay, so we're looking for failures first. So pull back into support, sellers try and fail, into strength, strength turns into pullbacks, and pullbacks back up to a new high. And then again, that's where we'd be expecting that symmetrical second leg. If we come in tomorrow morning and if we've already achieved that symmetrical second leg, then we look for a measured correction, two-legged correction, back to an area of support, trap low, failure, strength, strength into pullbacks, and pullbacks, we go higher. Again, we look forward to a pullback to support for that second leg up. If we get the second leg while the rest of us are sleeping here tonight in the US, right? Lucky you in Asia and early in London, then look for a two-legged correction back to trap low at support, and we'll look for the third leg higher from there. Very difficult to tell where we're going to pull back to. We may just shoot higher from here, right? But we will be looking for a second leg higher from this. After that second leg, measured correction back off the high, trap low, and look for that third leg going higher. Going to be interesting tomorrow. Bears. What are they looking for here to wrap this chart up? The Bears are looking for a lower low and to hold a pullback. The Bears really have a tough time right now. You know, I think the hardest part right now is the fact that everybody sees this big move higher. So the Bears, and I say this every night in the newsletter, what's the best way to sell a bull market? Wait for it to turn into a bear market. How does it turn into a bear market? We have to get a lower low, hold a pullback, and then try to get short before we run into any of these support levels below. That's why I said it's going to be a little bit tough. I don't think the buyers are going to have much room for anything until they can really break below and stay below this 43.92, right? So break down, pull back, and go. Even then, they've got this measured move waiting for them. But this, of course, is a long-term chart. So lower low, hold a pullback. Once they hold the pullback, then they can start selling short down to support levels below.